Welcome to our podcast, Akone Informapedia episode 13. I am your host, and today we present the comprehensive guide on the new tax regime for FY 2025-26, AY 2026-27. If you're a taxpayer in India, this is an important update that could save you money and simplify your tax planning. Let's dive into the details. The government has introduced revised income tax slabs under the new tax regime for FY 2025-26. This regime offers concessional tax rates and simplified slabs, making it easier for taxpayers to calculate their tax liability. However, remember that deductions, except for a few like Section 80 JJA, 80M, and standard deduction, are not allowed in this regime. Here are the new income tax slabs and rates applicable for FY 2025-26. Up to 4 lakh rupees, in EL, 4 lakh to 8 lakh rupees, 5% 8 lakh to 12 lakh rupees, 10%, 12 lakh to 16 lakh rupees, 15%, 16 lakh to 20 lakh rupees, 20%, 20 lakh to 24 lakh rupees, 25%, above 24 lakh rupees, 30%. These slabs ensure that individuals with incomes up to 12 lakhs pay zero tax, provided they file their returns to claim the rebate. So how does this benefit you? 1. Higher threshold for zero tax. Earlier, taxpayers earning up to 7 lakhs paid no tax. Now this limit has been increased to 12 lakhs. Around 1 crore taxpayers who were previously paying taxes between 20,000 and 80,000 rupees will now enjoy zero tax liability. 2. Standard deduction. Under the new regime, a standard deduction of 75,000 rupees is available. This means salaried taxpayers won't pay any tax if their income before the standard deduction is 12.75 lakhs or less. 3. Marginal relief. For those earning slightly above 12 lakhs, a marginal relief ensures that they only pay tax on the amount exceeding 12 lakhs. For example, someone earning 12 lakh 10,000 rupees will pay just 10,000 rupees as tax instead of 61,500. 4. Rebate of 60,000 rupees. Taxpayers with incomes up to 12 lakhs can avail a rebate of 60,000 rupees under Section 115 BAC 1A. The new tax regime is ideal for individuals looking for simplicity and lower tax rates. It applies to individuals, Hindu undivided families, associations of persons, and bodies of individuals. However, if you have significant investments eligible for deductions under the old regime such as home loans, medical insurance, or tuition fees, you may want to compare both regimes before deciding. While the new regime limits deductions, there are still ways to optimize your tax savings. First, contributions made to the NPS Vatsalya scheme qualify for deductions under Section 80 CCD. This scheme allows parents to maintain national pension system accounts for their minor children. Second, the Budget 2025 has reduced TDS and TCS rates and increased thresholds, easing compliance for taxpayers. For instance, TCS on certain transactions is now at 2% instead of 2.5%. Lastly, non-resident companies providing services or technology to India's electronics manufacturing sector can opt for presumptive taxation, ensuring tax certainty and ease of doing business. To summarize, taxpayers earning up to 12 lakhs pay zero tax under the new regime. A standard deduction of 75,000 rupees is available. Marginal relief ensures minimal tax for those earning slightly above 12 lakhs. Remember to file your ITR to claim benefits like rebates and exemptions. With these changes, the government aims to promote voluntary compliance while reducing the burden on middle-class taxpayers. The new tax regime for FY 2025 to 2026 brings significant relief and simplifies tax calculations. Make sure to evaluate your financial situation and choose the best option for yourself. File your returns on the official website https://www.incometax.gov.in/iec/faux-portal/. Stay informed, stay compliant, and make the most of these reforms. Thank you for watching. Subscribe for more updates.